When you look at the gold trade, what is the actual catalyst behind gold outperforming stocks and treasuries this year? Is it geopolitics, tariffs, or just interest rates altogether?
If we look at the foundation of this rally, is there a new catalyst? No. The foundations have actually been laid over the past few months, past couple of years. It really started back in 2022 when we saw the accumulation of central bank buying at a rapid pace, buying at record levels through 2023 and into 2024. So we've had a solid floor for this rally. But what's changed is that ETF buyers have now come into the space. And that has been driven by many of these macro factors that you've mentioned, the geopolitical risks, the uncertainty around tariffs, what that might mean for inflation and global growth. And all of these factors have come together to really boost gold and hit that 3,000 level.
That's interesting. So when did we start to see a pickup in ETF buying in gold?
That only happened at the start of this year. In January, it started to increase steadily. February was a key month because we saw inflows of 100 tons, and we haven't seen that level since March 2022 after Russia invaded Ukraine. So that was a big tipping point. And the pace so far in March has continued at a rapid pace.
And speaking of Russia, I mean, President Trump expected to meet with Russia's Putin or speak on Tuesday. So that's something that could perhaps bring together some new headlines on geopolitics. In general, is there a strong correlation between market volatility and the price of gold?
There is. We've seen moments when gold tends to behave as a risk-off asset, but also a risk-on asset. What we're seeing at the moment is that there's vast uncertainty, and that's really propelling a lot of safe haven appetite in gold. So it also means it could go in both directions. If we see an easing of geopolitical risks, perhaps we start to see an unwinding of some of that new appetite in gold. But what we haven't seen is a lot of tactical positioning coming into the gold market to drive the recent rally. So we really need to keep an eye on those tariff risks and the geopolitical uncertainty.
Well, what is the tariff risk for gold miners and just the broader ecosystem?
There's, on one hand, it's also the impact, what it might mean for gold prices directly, whether there's any tariff impact there. But really, where gold is feeding here is what tariff risk means on a much more global basis. Is it higher prices? And when we tend to see a lot of inflation risk, gold tends to outperform. But there's also concerns around stagflation and recession as well. And if it impacts global growth, we know that gold tends to be an asset that outperforms during recessionary periods. And that ultimately is, that uncertainty is ultimately helping gold as well.
And do we see this broaden out to silver as well?
Silver is a slightly different beast. Where we have the one hand where it behaves as an industrial commodity, and the other hand it has those macro factors that are driving prices as well. In the current environment, we'd say silver is the one precious metal that is pricing in the most tariff risk. If we're looking at the differential between regional trading, if we're looking at flows of metal coming into the US, silver is where a lot of that concern is currently priced in. But if we're looking at the broader industrial picture for silver, that's where we're still seeing very good, strong growth. The market deficit for silver over the past 4 years has exceeded 15,000 tons. So we're seeing a rapid increase in demand for silver, and that's now being boosted by some of that investor appetite.
For commodities in general, what will you be watching for when Fed President Jerome Powell speaks this week?
I think the risks here are not necessarily, as you mentioned, around the rate cut itself. We do expect a rate cut in the second quarter and another one in the third quarter. But we think really we're looking for what the implications might be around tariff risk, what it might mean in terms of economic growth, and whether we're looking at concerns around recession risks. So I think there's still some near-term factors we need to keep an eye on. But I would say some of the factors that we need to keep an eye on over the next few weeks are central bank buying, the ETF demand, whether that continues, but also the scope for some of the China's insurance companies which are now allowed to buy gold, whether that provides the next leg higher.